Here to help us break down the results more is Rishi Jaluria, RBC Capital Markets Software Equity Analyst. So, Rishi, we're seeing obviously that cutting of guidance there is clearly putting pressure on the stock. What are your big takeaways from this?
Yeah, and thank you so much for having me. Always great to be here. Look, I think there's a couple things going on. Number one is you just have foreign currency, and we have to look at everything on a constant currency basis. But even stripping out the impact of currency, like we are seeing a deceleration kind of across the board, whether we're talking marketing cloud or we're talking sales cloud, right? Sales cloud and service cloud seem to be doing well. But yes, it ultimately comes down to the guidance, and that CRPO guidance, which is the most important metric because it's the best forward-looking indicator we have in a recurring revenue model like this, was 15% constant currency next quarter. And even if that proves to be a little conservative, I think investors were looking for maybe more resilient growth, especially because Salesforce is a large platform and a potential consolidator of spending. So that's what I really think is pressuring the shares in the aftermarket right now.
So looking forward, you've got the cut to guidance. Looking back, look at the last month, the software sector is up 4.6%, but Salesforce is up just over 1%. Whether it's looking back or looking forward, is this a Salesforce issue or more of a macro issue?
Yeah, look, I think, in terms of the stock price itself, I think that is a Salesforce issue, right? And the good thing is it feels like a little bit of a self-help story, right? When I talk to investors on the name, they're worried about margins and potential for margins to expand, as well as future M&A. And, because there's obviously a lot of controversy still around the Slack acquisition and MuleSoft and Tableau. So to a certain extent, I think there's still a little bit of a show me story here until, we start to get a little bit more clarity on, okay, well, can they kind of maintain a healthy growth clip, but also expand margins and return more capital to shareholders? I think the share buyback is a great start, right? And that's kind of the piece that gets lost in the headlines here. I think that's going to be, great for the stock and great for investor sentiment over the long term. But we'll find out a lot more details at the Analyst Day and at Dreamforce coming up soon.
Yeah, the $10 billion share buyback there. You're right. It is getting buried in these details here when it seems like the street is focusing on that full year revenue cut in terms of guidance. Rishi, how does Salesforce, do you think, stack up to some of its competitors? Because we're seeing that guidance cut. The heart of this is the resiliency that we're seeing of the software downturn. How do you see Salesforce, how do you see this shaking out here for Salesforce as we do enter this slower growth environment?
Yeah, and look, I wouldn't be surprised if a lot of software stocks are off tomorrow on the Salesforce results, right? Because this is a bellwether for the rest of the SaaS sector. But I would say this, in the long term, exiting the recession, I can see Salesforce actually being in a stronger state, right? Because there are a lot of VC-backed tech companies that are just relying on basically free cash to be aggressive with their sales and compete against Salesforce. And I really feel like Salesforce, because it is a platform, because you can get sales and service and marketing and commerce and all of that from the same company, I actually think there's the opportunity for them to consolidate IT budgets and actually be in a stronger position from a market share perspective coming out of a recession. So if I'm a bull on the name and I own this, shares of this, I'm definitely watching what are CIOs saying, how do spending intentions for Salesforce evolve. We actually just did our own CIO survey last week, and it came out very positive for Salesforce. So if you're willing to kind of weather the choppiness over the next couple quarters as we deal with an uncertain macro, I can see a position in which Salesforce becomes a net share gainer over the next 12 to 18 months.
So are there any risks that you see specifically to Salesforce versus its competitors in this environment?
To me, I think the two biggest risks, number one is, to what extent are they dependent on headcount growth? And if we start to see, headcount reductions in companies or even hiring freezes, that's going to be a little bit negative for the growth algorithm. And so I think that, it would be specific to Salesforce or companies similar to them. I think the other thing is because Salesforce is the big dog, you have a lot of players that are directly trying to go after Salesforce, right? Like HubSpot, like Freshworks, like Adobe. And so that kind of puts them in a little bit of a precarious situation. But again, as I mentioned, I think a lot of these smaller VC-backed tech companies that are offering features that you can buy as part of the Salesforce platform will ultimately benefit Salesforce in the long run.
Rishi Jaluria from RBC, great to have you, sir. Terrific analysis there.